Sup traders, how y'all doing? Let's talk about what might be the biggest cheat code when it comes to trading, and this is also useful for trading stocks. So let's get into it. A video about all about the funding rate, all about who's long, who's short, understanding the positioning of traders, and how that's going to affect price and create asymmetric trading opportunities. Let's get to it. So, first of all, where am I? By the way, welcome and much love, Trav here. I'm in Hawaii. I just finished a hiking tour, which is my non-trading business, which is doing awesome. I mean, if you've been with me, I only started this a couple months ago, and it's doing surprisingly well. I'm starting to get some bigger groups, and a bigger group of 5 or 6, and I might get paid like $600 or even $800 in a day for a hiking tour. Or $1,000 is possible if I have a bigger group. For a day's work to go hiking, make $1,000 for a day. So I'm having the potential to save money to add to my trading accounts, which is exciting and which is important. How do you fund your trading account? If you have no money, you shouldn't think about trading. You got to think about how to raise your income outside of trading. And more than just selling a course inside trading, but having other businesses. Anyways, let's get into the trading topic. So, I don't have the exact computer backtesting on this, but I'm fairly certain there's a massive edge, and we're going to talk about it. And it's one of the things that I'm most certain has a massive edge. And that is, what is it? It is using the funding rate, but we're going to talk about GameStop too, so stick around. So, and by the way, I'm still coughing. I still have seasonal allergies. It's going to end soon, I think. Okay, so what is the funding rate? The funding rate is essentially the long-short ratio. So, or the buy volume or buy open interest. So essentially, in crypto, if you're trading perpetual futures, the perpetual futures is tied to the real price of the asset by having a funding rate where every 8 hours the longs pay the shorts and vice versa. So this is necessary for the asset to look like, for the future to look like the actual asset. So let me give you an example, because when it comes to trading, say, gotta make a left here, hold that thought. Made it. When it comes to trading futures, for instance, say you're trading gold futures or you're trading index futures, the future is tied to the underlying asset by delivery. At the end of the month or at the end of the quarter, you can resolve your future contract by taking one contract of gold physically for delivery if you want, right? So what ties a Bitcoin perp to a Bitcoin is the funding rate, where if there's too many longs and everybody wants to buy, it would push the perp price up beyond the underlying price. If too many people want to go short, it would push the price down so that the price goes underneath the actual price of Bitcoin. So what happens now is, if, say, the funding rate gets super high, what you can do is you can short Bitcoin and you're paid the funding rate and you buy Bitcoin. It's called cash and carry, right? So, am I wrong? Is that not cash and carry? You let me know. But what happens is, arbitrageurs can come in and can normalize the price, right? So the perpetual futures is always going to be tied to the regular price thanks to the funding rate. Now, the opportunity of the the funding rate isn't in collecting the funding fee. Although there is an opportunity there. The main opportunity in the funding rate is it's telling you the positions of other traders. And that's very powerful and important. And one of the reasons it's so important is this is something that you can never see from looking at the chart. The chart never reveals the exact positioning of the market participants. And it's amazing. So check it out. If the funding rate is neutral, that means by volume, by open interest, by trading. If the funding rate is neutral, it means there's the same amount of demand for shorts as there are for longs. Right? There's say $1 billion worth of longs and $1 billion worth of shorts. In a neutral market, if you're trading the funding rate, there's no opportunity there. What happens though is every once in a while, the funding rate reveals a huge imbalance in trader positioning. So, and I'm going to talk about the trading routine itself here too. So for example, I noticed a couple weeks back, I took a short-term trade. The funding rate on an altcoin was negative 2,000% APY. What did that mean? It means in order for someone to be short, they have to pay 2,000% of their position a year. On the monthly was like negative 160%. To even hold the short up for a month, they would get liquidated almost twice. Just even if price went sideways, right? They would get liquidated just from the funding fee in about 2 weeks. So what does that tell you when you see something like that happen? It tells you that there is a massive imbalance in the marketplace. There are way more shorts than longs. Everybody, not only is there an imbalance, it's topical and popular to be short. And this can happen when price is at a high point. It can happen when price is at a low point. You don't know by looking at the chart. This is something you have to look behind the scenes on, which is why one of the reasons it's so valuable is because most people don't look at it. And I believe you can make a lot of money just blindly trading the funding rate without paying attention. Now I'm going to give you some more examples. Not always, but often at a significant market bottom before reversal, the funding gets hugely negative. Well, why does it mean there's a reversal though if there's hugely negative funding? Because if most traders are short, it's not that the traders have to lose money. A lot of them might be in profit. If price keeps going, say they're all short. If price keeps going down, what's going to happen? Some of them are going to start to take profit and they're going to buy out of their positions. If price moves against them, they're going to be forced out of their positions, either closing break even, taking a stop loss, or getting liquidated. So it adds a huge pressure for price to go the other way if everybody's positioned one way. So in major market bottoms in crypto, there's pervasive negative funding across the space. On the flip side, at major market tops, there's pervasive positive funding across the space. People might pay an insane percentage to keep their longs open. And again, what happens if everybody's long, if price goes in their favor, they may take profit. If it goes against them, they will certainly be forced out of their positions, whether they want to or not. So what does that mean? Well, if you pay attention to the funding on a higher time frame across the space and as an aggregate of the space, it can tell you if there's an opportunity for a major high time frame reversal or continuation as well, because it can be. I've seen this. Price goes through a significant rally and you think, well, maybe this rally is going to run out of steam now, and you look and everybody's fucking short because they don't believe it can go higher and they're going to get liquidated. On the flip side, you'll also see sometimes price is dumping, and you go look at the funding rate and everybody's long because everybody's trying to buy the dip, right? Now, we're going to come back and talk about the sort of the step-by-step in trading it, or the routine. But it's like an X-ray goggles of the space. And it's super helpful for crypto because crypto, I don't know the proportion, but a huge proportion of volume is traders, not investors. It's perpetual futures, not spot. I cannot tell you what the proportion is. That'd be a good thing to have. But yeah, it's kind of a cheat code. I mean, you look at the chart at times when there's pervasive negative funding, it just goes the other way, and vice versa, but especially the negative. So before we come back and talk about how to trade it, or some ideas for how to trade it, let's talk about GameStop. So GameStop in 2020, it was, price went crazy, right? It went up 100x. Why did it do so? Well, part of it is Roaring Kitty, part of it's Wall Street bets, but part of it is it had the stock market equivalent of persistent, pervasive, strong negative funding. It was heavily shorted. It was a massively shorted stock. I think the short float was like 40-50%. So what that meant is, if price started to go higher, those shorts would be forced out of their position, and they were going to have to buy like 50% of the outstanding supply. Is insane, right? So that's an example from stocks, and you could do this on stocks too. Short float trades. Find the most shorted stocks and long them. I just don't have experience with that, but I know that that's what happened with GameStop. Now, so here's a practical way to trade this with crypto. Okay, we're gonna run into a little bit of traffic. Maybe it's traffic hour. I got out of my tour early. Is what it is. So, if I'm trading the funding rate, I'm not as much interested in the chart itself. I'm interested in the funding rate. So I would maybe start off by going to coinglass.com and clicking on funding rate. And then I would go down. Now it shows the funding rate of the top 20 coins. And I would click see all. And it shows the funding rate of the top, I don't know how many it is, maybe 300 coins. And then I'm going to sort it. And what I'm going to look for is extreme, and then I'm going to click on 1 year. So now it's going to show me the APY of the funding rate, and I'm going to see what is the highest and what has the lowest. And if something is stratospherically off the charts, I'm just going to go the other way. I don't care what the chart looks like, and I'm going to close it when the funding rate starts to normalize. Okay? Now, I am going to have to look at the chart because I'm going to have to set a stop loss, and I still might want to take profit on the chart, like find a level and close. Now, these are also tend to be shorter term trades because they can reverse. But, and so from CoinGlass, you can go to Coinalyze, and on Coinalyze, you can look up a funding rate chart for a specific coin. And that will show you a chart, and you're going to notice on the high time frame, anytime it gets super negative, price rips. Not necessarily immediately, you might need to wait, but these are shorter term trades, because as soon as the funding rate is normalized or even approaching normal, the edge is gone, you get out. So again, I go to CoinGlass, funding rate, click see more, so I have all 300, put on a year, what was the funding rate for a year, sort it, and I saw negative 2,000% APY. I don't give a fuck what the chart looks like. I'm long in here. I'm gonna get paid a lot of money every 8 hours just from being long, right? Yes, again, I'm gonna have a stop loss, but what happened when I entered is it went straight up. It hit a resistance. I TP'd and logged off. Funding was still like pretty high. The next day, the whole market went down, including but funding was still negative. And then what happened? It rallied to all-time highs within a couple days. So I'll also say, as related, anytime you look at the chart and you think you have a trade, go check the funding rate, because sometimes I'm like, this looks like a short. We just failed at this high. That looks like a good short. And then I go check the funding rate. Everybody's short. Don't trade it, or even go long, right? I think, yeah, a lot of... I'm a fan of using the chart for TA, but it doesn't necessarily show you how traders are positioned. It doesn't necessarily show you what's actually maybe the most important thing, which is trader positioning. So, as for my own trading, I have my Market Timing Pro system, which works awesome. It's slow though. It's a trend following system that trades reversals and breakouts to the long side on strong assets that of old monthly levels based on daily close, and there's some other parameters. But my problem with it is I'm a little bit impatient and it's a little bit slow. It doesn't, it's really slow. It's really good on a yearly basis, but it doesn't make a quick buck. And I really like the funding rate trades because they can make a quick buck. And they can also be uncorrelated, and they happen sort of randomly. I mean, oftentimes it is correlated with the general direction of the market, but sometimes something goes rogue. And it helps with asset selection too, where you want to long this market. So also it could be like this. If it's like, this is a market that I'm supposed to be long in because I have a high time frame signal, I'm going to go to the funding rate and see which one is the most heavily shorted, because that one's the most likely to rip higher. At the same time, I can go look, if this is a market that I'm supposed to sell in, I can go look at what has the highest funding rate, what has the most longs, and then sell that market. So this isn't 100% hit rate, but you can use it for quick day trades, and you can also use it for market tops and bottoms. Anecdotally, and I've seen it work awesome. Again, I don't have strict computer backtesting like I do for my Market Timing Pro system that has strict and robust backtesting, but it makes all the sense in the world of why it should work, and it looks, it's just awesome. So, I hope you find that useful, and I plan to do more of these trades. So appreciate y'all, much love. Talk soon. Peace.